The deal broke down Friday night. At midnight Saturday, 50% tariffs on $20 billion in Canadian goods took effect. Cement, hockey sticks, building materials, wine, clothing. Carney suspended negotiations and said Canada would retaliate dollar for dollar. He called the U.S. demands uneconomic and unfair. Canadian markets opened this morning under a new reality, the opposite of the optimism that drove the TSX up 1% on Wednesday when the pause was announced. Three things in this video. What the breakdown means for Canadian investors specifically, the sectors, the dollar, the BOC calculus. And then the two events this week that could move everything else. NVIDIA on Wednesday and Warsh at Jackson Hole on Friday. Here is what actually happened. Tuesday, August 19th. The Trump administration paused the 50% Section 338 tariffs for 3 days. Trump said, "We have a deal." Trade Minister Dominic LeBlanc and U.S. Trade Representative Jamieson Greer were photographed together in Washington. The TSX jumped 1% Wednesday morning on the news. Materials, real estate, precious metals leading. The deal framework that was reportedly close. Tariffs on Canadian-built cars and trucks cut to 15% from 25%. Steel and aluminum tariffs halved to 25%. Reuters cited a source familiar with the matter. The deal was close. It was not closed. Friday afternoon, LeBlanc and Greer were still inside the USTR headquarters at 5:30 p.m. Eastern Time. Negotiators had not emerged with a final agreement. The gap between what Trump's administration was demanding, described by Carney as uneconomic and unfair, and what Canada was willing to concede proved unbridgeable in 3 days. Just before midnight, Carney's office released a statement. He was suspending trade negotiations and directing Canada's negotiators to return to Ottawa. At midnight, the tariffs took effect. Saturday morning, Carney called it a miscalculation. He promised retaliation dollar for dollar. He said Canada would not sign a deal that was not a good deal for Canadians. For the TSX this morning, 3 specific pressure points. First, Canadian dollar. The loonie was already weakening in 2026. Trade war escalation reduces investor confidence in the Canadian economy, pushes capital toward U.S. assets, and widens the spread between U.S. and Canadian interest rates, all of which weaken the dollar. For Canadian investors holding U.S. assets, a weaker loonie continues to add to returns in CAD terms. For the Canadian economy, it adds to imported inflation, just as the BOC is trying to keep inflation near 2%. Second, trade-sensitive TSX names. Railways, pipeline operators, and building materials companies all have meaningful U.S. export exposure. The Wednesday rally in these names was built on the hope of a deal. Today, that hope is gone, and the 50% tariff is live. Canadian National, Canadian Pacific Kansas City, building materials exporters. Watch these specifically at open. Third, the BOC calculus for September 2nd. The Bank of Canada meets in 9 days. The trade breakdown makes the September 2nd decision significantly more complex. Tariff escalation is inflationary. It raises the cost of Canadian goods exported to the U.S. and raises the cost of retaliatory measures on imported U.S. goods. That pushes inflation higher, but trade uncertainty also damages business confidence and investment, pushing growth lower. The BOC must decide whether the inflationary effect or the growth-damaging effect dominates. A September cut just got harder to justify. The Canada breakdown is the Canadian story. The two events that will define the direction of global markets this week are NVIDIA on Wednesday and Warsh at Jackson Hole on Friday. Wednesday, August 27th, NVIDIA, Core PCE and GDP. NVIDIA reports Q2 earnings after market close on Wednesday. The company represents approximately 7.55% of the S&P 500. Its data center revenue grew 217% year-over-year last fiscal year. Every quarter for the past 2 years, it has beaten expectations. The question this quarter is not whether it beats. It is whether the guidance for the following quarter raises or disappoints a bar that is already extraordinary. Jay Woods of Freedom Capital put it directly, if there's a path to 8,000 in the S&P 500, it's going to be led by NVIDIA, and that could start next week. Beat with strong guidance. The AI infrastructure narrative is confirmed, tech recovers from last week's bond yield pressure, the S&P pushes toward 8,000. Miss or cautious guidance. The 50.4% Q2 earnings growth story that justified the rally this year gets its first serious question mark. Wednesday also brings Core PCE, the Federal Reserve's preferred inflation measure, for July, and the second GDP estimate for Q2. These two data points together will define the context for every word Warsh says at Jackson Hole 2 days later. Friday, August 29th. Warsh at Jackson Hole. Fed Chair. Kevin Warsh has said almost nothing substantive since taking over. Jackson Hole is the first major policy speech where markets expect real communication. The backdrop entering Friday. 30-year Treasury yields still near 5.2%. 3 July FOMC governors voted to hike. Walmart confirmed the consumer is feeling gas prices. The Canada tariff escalation adds inflation risk. NVIDIA's results 2 days earlier set the market tone going in. 3 scenarios. Warsh signals comfort with higher yields as a market-clearing mechanism for fiscal concerns. Yields rise, equities fall. Warsh signals concern about the yield spike and confirms the Fed is monitoring financial conditions broadly. Yields fall. Equities rally. Warsh says nothing meaningful. Markets read the silence as hawkish by default, given the 3 July dissenters. There is no scenario this year where Jackson Hole is a non-event. The bond market needs an answer. The equity market needs a direction. Warsh provides one on Friday. Canadian markets open this morning in a different world than they were in on Wednesday when the tariff pause was announced. The 50% tariffs on $20 billion in Canadian goods are live. Canadian retaliation is coming. The negotiations that were described as close are suspended. The BOC meets in 9 days, and the decision just became significantly more complicated. Tariff escalation is both inflationary and growth-damaging simultaneously. The Canadian dollar, trade-sensitive TSX names, and the Bank of Canada's September 2nd language are the 3 things to watch at the Canadian-specific level today and this week. At the global level, 2 events that could change the direction of everything. NVIDIA Wednesday sets the tone for AI and the S&P 500's path to 8,000 or a pullback from record highs. Warsh Friday at Jackson Hole answers the bond market's question about whether the Fed views 5.2% on the 30-year as a problem or a feature. Canada woke up this morning to a trade war that escalated overnight.